First idea, Kirin Holdings, a major player in soy sauce, among other things.
So they're the second largest beer company in Canada to Sapporo. But 60% of the market cap actually is in a public pharmaceutical company, shares from public pharmaceutical company and a public cosmetics company. So you're buying this company at 11 times earnings with a 3.3% dividend yield. So it's a really compelling cheap stock. And like more and more Japanese companies, capital allocation, they're buying back stock and delivering some shareholder value here. So a really great consumer products business.
Yeah, to be honest, actually, I'm not sure if they're, as you say, huge in booze, but I don't know if they are in soy sauce. No. Yeah, I think that might be another brand. Yeah, that's interesting. But it's interesting, the Japanese, they love rugby and they like beer, don't they? Well, I guess the world likes beer.
They drink a lot of beer, and their beer brands, some of them are quite international brands.
Yes.
Sapporo being the big competitor.
And then Asahi would be another
Absolutely.
one. Yeah, I always think it's funny that they love rugby as well. Yeah. Walt Disney is your next idea.
Sure. So Walt Disney shares have been under pressure. Disney Plus, has been growing slower, as with the whole streaming sector. But other businesses of Disney, the movie business is booming with all those movies like, Pixar and Thor, X-Men and all of that. The Marvel companies and Star Wars and theme parks, people just can't get enough of them, and they just keep on raising the prices forever. And the streaming business, Andy, is losing money. So it cost them $1.5 billion last quarter, but that's probably the peak. And so streaming will get to profitability in the next couple of years. It's currently costing them about $3 a share. So we're expecting the share earnings for Disney to double over the next 3 to 4 years. They own just an incomparable, unique set of franchises. They're growing the business. They do what they do so well that, for us, the stock has been, unfairly punished, and the share should be double this price in the next few years.
So apparently, according to the Washington Post, for years, perhaps, they've been angering fans of the theme parks who claim they nickel and dime them, the fees and increases and restrictions. But apparently, in January 11th, earlier this month, they said they were offering some free perks and getting rid of some unpopular restrictions. So I guess they have had pushback over the cost.
I guess so, but I'm wondering where they're going to make up that money, because they'll probably charge you more for parking or something. And it's just like the demand is incredible and the parks are busy.
Yeah. I have been there. It's a religious rite for Americans going there. Everybody had new sneakers. I think they all buy new sneakers to go to Disney. And then finally, Reckitt Benckiser Group. Remind us what they do.
Sure. So anybody, living through the pandemic, you probably used a lot of Lysol. And Lysol is a Reckitt, one of their major products. So is Finish, a cleaning product, as is Strepsil, which is throat lozenges, and Enfa, which is infant baby formula. Reckitt, was a little bit mismanaged up until a couple of years ago. They've turned the business around. They're back on a growth path. They have unique products, and again, 17 times earnings, 3% dividend. We're looking for margins to keep on growing, which will drive earnings, dividend growth, cash flow growth. Could make some niche acquisitions along the way, and just now become an incredibly well-run consumer products company, trading at a discount to some of the competition given the past problems.
And what about other big consumer products companies like Nestle, or their food, of course, mostly, and Unilever?
Sure, we actually own Unilever, which has been a bit of an underperformer over the last few years, I have to say, but still a pretty cheap company and phenomenal growth in emerging markets and the like. Nestle, cream of the crop, love to buy it at a cheaper price. It's a spectacular business. I put Procter & Gamble in the same category as well. Spectacular business, would like to own it at a cheaper price. Earnings have moderated there and facing some pricing issues and the like. We like the sector, though, because I'll tell you, through good times and bad, especially with interest rates peaking here, and inflation probably moderating, is a good sector to have exposure to.
Apparently, according to Wikipedia, the first Lysol brand antiseptic disinfectant was introduced in 1889 in Germany by one Gustav Raupenstrauch to help end a cholera epidemic in that country.
There you go.
And then it was used extensively during the product. Was used extensively during the 1918 Spanish flu pandemic. So history repeats itself.
So I'm sure they're not hoping for another pandemic, but nonetheless, it remains a product that a lot of us are still using in many places.
Yeah.